Welcome to Bedrock Bookkeepers Online Academy for another awesome segment. My name is Joe DiChara, again inviting you to our site bedrockbookkeeping.com. We are constantly updating our content, our videos, our courses, all for you, the student that wants to learn about bookkeeping and the business of bookkeeping. Again, that's bedrockbookkeeping.com, and we welcome your feedback and suggestions, anything that can help us improve your experience with us. Enjoy the next segment. Thank you. Chapter 10, Financial Reports and Tax Returns. This is where I'm going to tie it all together. I'm going to take you from the end result, which is the tax return, all the way back to the initial start of everything, the initial transaction. We call this an audit trail. What I'm going to show you is sort of like a trail of breadcrumbs. I'm going to show you exactly how does a deal I make with the client to provide services, accounting services, a tax return, when I invoice them, when they pay me, how does that wind up on my tax return? And again, that is what we call the audit trail. Now, the lack of an audit trail means that you're not audit proof. Okay, so the audit trail is going to be a step-by-step process. It's going to be, this is what we call those books and records. Okay, the books show the numbers that have arrived on your tax return. They didn't just arrive there, they were put there by somebody. And now where did those numbers come from? That's the records. Those are the documents. So you have a virtual breadcrumb trail from that initial, hey, how you doing? You want to do business, to the invoice, to the check being paid, to the recording in the journals of the cash disbursements, cash receipts, the accounts receivable, the accounts payable, all the way back to your reports. So let's start at the end. Okay, I love that term. Let's begin with the end, and we work backwards. I showed you we had the tax return. That's where it's going to wind up on. To be honest with you, a tax return is almost like an administrative task. It has to be done. Really, for me as an accountant, that's just part of the process. That's part of the job. As an entrepreneur, your job is to look at your financial results and determine, are we doing good, are we doing bad, do we actually have a business here? I've seen too many businesses not just barely survive. That's not the American dream. The American dream is we're going to start a business and prosper. That's what America was built on, freedom, the freedom to do what we want to do, the freedom to start a business and bring it to wherever we want. Now, if you're happy just making a living, that's fine too. Okay, I don't condemn people for having a business and really owning a job. Maybe what you've done is you've created the freedom. And that's part of the American dream also. I come and go as I please. I've had a business for a long time. I make my own hours. If I want to hop on a plane and go somewhere, I go. Not many people have that freedom. I don't have to call in sick. If I'm sick, my work doesn't get done. Although a lot of my work does get done because the way I'm structured is I have people doing my work for me. Anyway, getting a little bit off the topic here. We want to look at our financial reports. And that goes from, like I said, the balance sheet and the income statement. Those figures come from what we call a trial balance. But I want to give you a word of caution here. because there's a step that I really haven't covered here, and the reason was because I didn't want to confuse you. The step is that we don't want to encounter this type of situation. Before the trial balance, what you're going to create, what the bookkeeper creates, is what we call an unadjusted trial balance. And you can see that over here. What's missing from the picture is the accountant, a good accountant that's going to prepare what we call adjusting entries. This is what turns it from bookkeeping into accounting. So there's really a financial mastermind here, and we're going to get into that in the last chapter. The success equation is composed of the entrepreneur who starts all this, the entrepreneur creates all the transactions, the bookkeeper compiles the transactions, and the accountant gets it into an accounting format that is turned into the balance sheet and the income statement. And that's how it works. So let's go through from the end all the way back. Let's go back to the beginning, and I'm going to take you to the end. And so you're going to see how this process works. We start with the idea, the agreement. Hey, we're going to do business together. We exchange products and services for money. It gets recorded in a journal. That journal is summarized into a ledger, a general ledger. From the ledger, we produce an unadjusted trial balance. Now, all this is a summary of those numbers that were added up in the general ledger. From here, you get a good accountant who makes the adjustments, for instance, corrections to the trial balance, the unadjusted trial balance. We're going to peruse the numbers and make sure that everything is in balance. We're going to double check the bank recs against the bank balance. We're going to record depreciation. We're going to record accrued expenses. We're going to record interest expense. And we're going to make the unadjusted trial balance we're going to transform it into an adjusted trial balance, which then gets separated into the balance sheet, the income statement, and then finally recorded on a tax return. Now let me take one step back here to the adjusted trial balance, and what you have is up to your equity accounts, if you could see this, anything above this is the balance sheet, and anything below the equity is the income statement. And all we do is we separate that into the balance sheet, the income statement. Again, those numbers go on a financial report, and what the entrepreneur should do with the help of the accountant and the bookkeeper is say, what does all this mean? What's the story of my business? Now, occasionally you might get hit with this, selected for audit. Now, a good accountant is going to reduce your chances of getting audited. However, some people just hit the lottery and get audited. And what I'm going to offer to you is, if you do get audited and you don't have a good accountant, you just email me and ask me what to do. I've handled plenty of audits, and I would be glad to provide you with a free consultation just in case. Now, it's not just an IRS audit. That includes workers' comp audits, Department of Labor audits, and any other type of audit in between. And I can definitely help you and at least tell you what your steps should be. And that's chapter 10. Like I said, the rest of the chapters, we only have 2 chapters left, and they're going to be short and sweet, and you're in the home stretch now. So again, I hope you enjoyed this as much as me, and I look forward to seeing you in chapter 11. Thank you. And that wraps up another awesome episode of Bedrock Bookkeepers Online Academy. Joe DiChiara here, inviting you back to our site, bedrockbookkeeping.com. Check us out for the latest and greatest offers, discounts, updates and content, videos, new courses. Okay, again, bedrockbookkeeping.com. Joe DiChiara, over and out. Looking forward to seeing you at the next segment.